Hey everyone, this is Dimitri Pragmatic with MarketChameleon.com. In this video, I wanted to turn our attention to the option block trade screener, which is a screener that traders come to sometimes to either find trade ideas or to get insight in what the option activity in the marketplace. And one important feature when you're looking through different option block trades is what did the option do after the trade, after the initial trade? Did the option go up? Did it go down? What did the implied volatility do? What did the stock do after the trade? And you want to do this for two reasons. One is if you have a theory about a certain strategy, you don't want to forward test that strategy with your risk capital. You first want to back test it and see, well, if I did these trades, what were the outcomes? Where was my theory correct, or was my theory not correct, and how do I make adjustments? The other reason you might want to do it is before actually entering in a trade, sometimes you want to see, well, after the trade, is the option, is the stock, is the implied volatility behaving the way I anticipated to behave at this point in time? Kind of get some confirmation before you enter in the trade, kind of as your insurance policy. And we'll go over an example of both of them right now. Now over here, we see these are the option details of the trade. You see here is the symbol, the time, the expiration, option type, put or call strike, the spot price at the time of the trade, and the open interest. I'm going to skip these theoretical prices here for a second and go first to the initial trade details. So this was the trade, the size of the trade, the price, the bid and ask at the time of the trade, and here's what the current market is. So this way we could compare the current market and BBO to the initial trade and see what the return has been so far in that option. And then we also see the implied volatility, if it went up or down since the initial trade. And then if we slide over a little bit more here, we could see the current spot price versus the original spot price, and has that gone up or down. So now that we have these statistics, let's kind of go and test some theories. So let's first go back to this main view here, and I want to test a certain theory, for example. And let's just say the first thing I want to do is look for option trade, very large options trades. Let's say that the volume of the option trade, just that one trade, is at least 50% or more of the average daily volume. So this is not a typical trade. It's large for based on the average volume, average daily volume. I also want to, let's say, look for a trade with a notional value of above, let's say, above 250,000. So as you could see here, that the notional value 319,000, 282,000. So this more likely is a institutional trade or a trade by professional. Let's also look. I'm going to narrow it down to calls. So I'm going to look at call options for now, and let's take a look at. My assumption is I want to look at trades that happen on the ask side or above. In other words, when the trade occurred, it happened on the MBBO ask or above. So my assumption here is that the incoming order, the order that was entered into the market, was a buy order, and it traded against the MBBO markets on the offer above. And let's take a look here. So we narrowed it down to 9. For the day, there are 9 of these candidates. So my assumption is, well, how did these options perform? Were based on these assumptions, I would think if the incoming order was correct, then the option price more likely would go up or down. So let's just see what happened here. So I'm going to go to performance tracker. So we could see here some of these were unchanged. So we see one over here that's up 13.8% from the time of the trade. So here trade at 47 cents. The new market's 53 cents, 54 cents, up 13%. These haven't moved that much since the trade. Here we see traded at 97 cents. The market is 121, 130, up 29%. Here the market's 181, 194 versus the initial trade of 151, up 24%. So at least for this one day, it looks like perhaps the suspicion was correct. It didn't work every single time. Some of them were unchanged, but you could see here that we had a lot of up moves, and some of these were still unchanged, haven't moved at all. And of course, we could go back days and see how that transpired, going back in time, not just on the current day. Now let's take a look at the put. What if we reversed it and said, well, today was a bullish day, a lot of stocks went up. So I'm going to reverse. I'm going to keep the volume the same, the notional the same, the trade side I'm going to keep the same, and let's just flip it to a put, right? So would have that worked if we just switched up the option? So now I switched that to the put. So you could see here for the put, there's only 3 candidates. So 2 of them, there's still not much happened. They're still unchanged. And over here, this one put, if you jumped in on that, that would have been a loser here. So this is just a quick example to test out your theories and say, well, if I did this today, how would the option and this, or the implied volatility, or even the stock price, what would happen going forward? Would my theory prove to be correct or not correct? And of course, you could also even narrow it down more by condition. So I'm just showing you a quick example here. Now, let's take a different look. Instead of testing a theory, let's say we're looking for something specific where we think, I want to look for an option, a call option here. I'm interested. And my suspicion is that if it trades on the, let's say, on the ask or above, right? So I'm interested in just call options that traded on the ask or above, and I want to look for options that are up since the trade. So now I'm going to go to the performance tracker, and I'm going to say I'm only interested in options that have gained at least, let's put 20% or more from the initial trade. So now that's what I'm doing. So I filtered this out. Let's go to the performance tracker over here. And now, as you can see here, these are the options that traded at one point, and now that the option has increased by at least 20% or more. And one of the reasons you might do this is say, well, I want to look for trades that are already confirming the direction to the side that I was anticipating. And then you could go through this. So let's see, there's a lot of low-priced ones. So you could do low-priced ones, or we could even change that and say, what if the initial trade was, let's say, above 50 cents? So I'm going to put that at 50 cents. Let's see if we could narrow that down further. So we still have 146 here. So you could see here stocks where the option over here in all these different stocks where the option since the initial trade has increased by at least 20% or more. And that's one way, and these are just in the calls. We could even further it down more. Maybe you want to do stocks in your watch list, or you could use any of these other parameters. But let's just take a look at maybe low market cap, maybe something that might potentially have an explosive move. So let's look for, I'll just do for a market cap under 1 billion. So now we just narrowed it down to 1. You see, so this is how you could continuously look. So we see that this option traded at 65 cents. The market's 75.90 cents now. Options up 26.9%. We see that the implied volatility is increasing, and the stock price has increased as well since that initial trade. And now we could, and we also have the trade conditions here. So this is one way that you could use a performance tracker to really help you narrow down on ideas, to either confirm theories or to help you actually find ideas that are already shown some type of confirmation that it's moving in, and the behavior is acting the way you anticipated it before you decide to enter in the trade. Thanks everyone for watching, and see you in the next video. Bye.